Peter, we saw this disaster with Dollar General. Just bring me up to speed. What happened with Dollar General? I was out for that.
Yeah, it was quite a dramatic earnings print last week, and thanks for having me, by the way. So the sales came in a little bit lower than expected. We look at same-store sales very closely. People expected something in the low 2% range, and they came in at about 0.5%. So not a disaster, but on a relative basis, that's disappointing. The big surprise was a very large reduction in the full-year guidance. And this is about 9 months after the CEO, Todd Bezos, had returned to turn around the company. And I think it was just showing signs that some of those efforts that he put in place just weren't really taking hold. So the stock lost about a third of its value last week.
Oh, it was wild. I had to look twice when I saw the number. So Dollar Tree, you also downgraded in July, but just kind of pairing them together, you could just say, and it feels like that this is the end of a structural shift towards that expansion and build out. We all remember the 2010s when these stocks were so exciting and the expansions were massive and there was deal making and it was innovative in some ways, and that is over now. So it's amazing to watch, and companies like Costco and Walmart just continue to do well when the Dollar Tree story and dollar store story more broadly looks like one that is not going to have a happy ending.
Yeah, that's exactly right. Yeah, Dollar Tree, Dollar General were growth darlings. If you go back to the Great Recession of 08, 09, those are some of the best stocks in the S&P 500 those years. So they typically do well when the consumer's feeling strained, at least historically. And right now, that's not the case. And so you mentioned earlier, inflation. Well, we really haven't had inflation for 40 years. So that's something now that is definitely squeezing their lower income customer base. And then conversely, I think with Walmart and to a lesser extent Costco, but Walmart in particular, growing its e-commerce and digital capabilities, that's becoming more and more convenient for middle and upper income consumers who might have historically traded down to the dollar stores to save a little bit of time or money. Now they're just going to Walmart. So Walmart, they put up a fabulous Q2 with 4.2% same-store sales growth.
And that's why I don't want to read macro into this. Normally that's my first instinct. Well, look at the dollar stores collapsing, must be a sign the economy is. And I see, different tweets and things to that nature. But I'm not sure that's what's going on here.
Exactly. Yeah. I mean, I think a really interesting stat is if you look at Walmart, and it's just U.S.-only stores. They're big box stores. So we're not counting Sam's Club. We're not counting international. The U.S. stores grew sales by $4.5 billion in Q2 alone. And Dollar General, their total sales base for Q2 is $10 billion.
Wow. So
you can definitely see Walmart is sort of this giant vacuum cleaner that's just sucking up a lot of market share. And again, I think as more and more shoppers are moving to e-com, I think COVID taught people that they can stay home and get things delivered to their house. Middle and upper income consumers are using that as their convenience play and less so using the dollar stores.
So how much juice I don't know if that's quite the analogy, how much further downside do these stocks have, do you think?
Well, there could still be more. I mean, one of the key reasons why we downgraded the Dollar Tree back in mid-July is there could be challenge regardless of who wins the presidential election. So on one hand, if Trump wins, there's increased risk of tariffs. And the dollar stores are challenged, particularly Dollar Tree, these low prices, and you're importing a lot of stuff from China. Now, if Harris wins, there is some legislation on the table called the overtime rule change. It might get blocked by the courts, but it certainly could go through with a Harris victory. What that does is that increases the minimum salary threshold where someone could become eligible for overtime pay. So it's more specifically, it would go from about $44,000 of income on a salary basis, potentially up to $59,000.
Wow.
And so if you think about dollar store managers, they usually make below $59,000 and they work a lot more than 40 hours a week. So this could also be a big expense headwind next year. So yeah, tariffs or overtime rule, looking at the 25, both could also bring earnings down a lot.